Hi everyone. So we've just had Rachel Reeves' first budget. I hope it lived up to all the excitement and the hype that it's been getting over the last couple of months. Because John's away on his holidays, I'm going to be the one that's given a bit of an update on what we've kind of seen today. Full disclosure, I have not read the full 170-page report yet, so there will be details to follow, and we'll get to that as we kind of go over the next couple of weeks. So she's basically said she needs to raise 40 billion through this budget. I'm not going to comment on politics, and I'll try to keep my opinions to myself. And we're not going to discuss whether she's fiddled the fiscal figures. Try saying that 10 times. So, I'll just going to kind of focus on the bits that really affect us now in our kind of your financial planning. So I'm not going to be too bothered at the minute about all the kind of forecasts and public spending and stuff like that. I do have my cheat sheet, so if I keep looking down, that's my cheat sheet. So the first kind of big main thing, so capital gains tax, they are increasing it as we kind of expected. So the basic rate of capital gains is going to increase from 10% to 18. So that's kind of where it was a few years ago. And the higher rate tax of 20% is going to change to 24. So that's just going to bring kind of sale of shares and stuff back in line with sale of property. And as far as I can tell, that's immediate. That's happening as of today, the 30th of October. With business asset disposal relief, so if you were selling your company, you're still getting that kind of 1 million entrepreneurs relief, it used to be called. So the first 1 million gains being taxed at 10% this year. From 2025, it's going up to 14%, and 2026, it's going up to 18%. So that's kind of capital gains. Business owners, employers, national insurance. So it's kind of been the worst kept secret, hasn't it? Employers' national insurance contributions are going up. So they're going up from the current 13.8% to 15%. And that's going to be from April 2025. The other bad news is you are going to start paying employers' national insurance on salaries of workers from basically £5,000 instead of 9,100. So there's going to be slightly more that we're getting taxed on, and we're getting taxed more. The good silver lining news, I guess, is the Employment Allowance, which is there to kind of help small businesses cover their national insurance. It's been increased from £5,000 allowance to £10,500 allowance. So if you are a small business and you've got a couple of employees, if you don't know, talk to your accountant. They should be able to sort you out with the Employment Allowance if you're eligible, and it's going to help you with 10.5 grand of your national insurance bill. And as I say, yeah, that's from April 2025. The next big change, inheritance tax. So the thresholds are going to remain frozen till 2030. So that's your nil rate band of £325,000 and your residential nil rate band of £175,000. Inherited pensions or unspent pensions, I'm yet to see exactly the definition, but basically they're going to fall into inheritance taxable scope from 2027. So from my reading of that, that is husband and wife, spouses can pass their pensions on death to each other, but then once they're going to be passed down the generations to children, grandchildren, they may become they're going to become inheritance taxable. So I think that's what their definition of inherited pensions is going to be, and I assume no tax between spouses will continue. And then the big one, business and agricultural relief, or business asset disposal relief. So farmers out there, agricultural relief and business relief used to pass on completely free of inheritance tax. We are now getting a new £1 million allowance on top of your other nil rate bands to pass on business or agricultural assets. Anything over that £1 million is going to be taxed at 20% inheritance tax, which is being billed as a 50% IHT relief. So that's that. And that's also going to include the alternative investment market, or the AIM market, if you may have heard us talk about it, but it's unlikely. Apart from that, those changes, corporation taxes staying the same. Stamp duty, land tax, the additional property surcharge was 3%. So that's if you already own a house and you want to buy a buy-to-let or a holiday house or something, you would have paid 3%. As of tomorrow, you're going to pay 5% additional stamp duty surcharge. Tobacco and vaping duties going up. EV, electric vehicle tax breaks, are being maintained, which is nice. Air passenger duty. It's been increased by £2, I think she said, for economy kind of tickets. It's only if you're flying your private jets that you're going to notice that difference. Alcohol duty got the biggest cheer, probably, where they said they're going to save you a whole penny on the pint. Um, we'll not get too excited about that. Income tax, national insurance threshold. So the rates we start, the amounts we're allowed to earn before we pay tax, they are going to begin to increase with inflation again from April 2028. So only 3.5 years to wait for that. R&D tax credits remaining the same. VAT on private schools starts in 2025. So that'll be big for any of our kind of clients over in England. And the other kind of main change that I kind of noticed was they're abolishing or changing the whole non-dom tax system, which basically is if you live in the UK but don't pay your tax in the UK, they're going to be changing that. So we'll wait to see what comes from that. So yeah, really, they're the main changes. I haven't seen any talk about pension income tax relief, about pension lump sums, or any like that being changed. The big difference there with pensions is coming into inheritance tax. The cynic in you will say they're again protecting the public sector, because obviously public sector pensions can't pass on to the next generation. But let's not get too drawn on that. So yeah, that's it for now. Give us a shout if there's anything really pressing at the minute, but in the next couple of weeks, me and John will be kind of coming out talking to you about how it actually individually affects you, and kind of giving a bit more detail as and when we see it. All right, speak soon. Bye bye.